Wow.
Because of all of the inflation that's going on. So it's a real issue. And most of us have no idea it's happening. That's why it's known as a hidden tax, a silent tax. Everybody pays the price. And if you don't know you're paying the price, you're the one that's probably paying the biggest price.
Right.
So this is where it's so important to get educated on that.
So what would be the thing if there was the biggest opportunity to create wealth right now?
Yeah.
What industry or sector would that be? Is that in this, stocks? I feel like nothing is stable. Like if you're going to put money in something, you could make a lot or you could lose it all within a month. Is it the stocks? Is it the crypto, NFT space? Is it the housing? Is it, investing in yourself in another way? What would you say we should be investing in?
Absolutely. So the answer is going to be looking for where the opportunity happens.
Okay.
So 2008 was real estate.
Mm-hmm.
That was the biggest real estate opportunity in our lifetimes. In 2020, it was stocks and crypto. In 2020, the stock market from its bottom to the end of 2020 grew by 60%. The crypto market grew by almost 600%. And so it's
fine. But if you didn't get out, you've kind of gone back to...
Of course. But this is where, again, the psychology of your investing is so important. But the thing that you want to pay attention to now is it's you want to see where things are going.
Yes.
That way you can make the right moves. Remember, history doesn't repeat itself, but it rhymes.
Yes.
Right? So you want to look at the same data points and the same factors and see what's happening. So
if you could make a prediction of what do you think is going to happen over the next few years based on history.
Yeah. So
what's rhyming right now?
Yeah.
What's rhyming for you?
So it's going to depend on one thing.
Okay.
It's going to depend on what the Fed does next.
Okay.
Because right now, and I'll explain and I'll give you
JASPREET SINGH, YouTube content creator of Minority Mindset, said these two things. If the Fed keeps fighting inflation, you will have a big opportunity in assets. That's when assets would crash and stuff like that. They would have to have pretty good fundamentals. Two, something else the Fed that may do is try to save the economy. And we haven't actually seen this yet with inflation so high. The only way the Fed can save the economy is by inflating even more. What I mean there is raising interest rates. And if you're not raising interest rates, let's cut that. What I mean is printing more money. Printing more money, which would increase inflation, also would increase asset prices as well. Assets prices would rise, inflation would rise, and what the content creator of Minority Mindset is saying, we have never seen that. We would fail upwards. Again, happy. How you guys doing? This is the State of DeFi. This is July 4th. I want to wish you guys all a happy 4th of July. So, JASPREET SINGH, YouTube content creator, he has two ideas that the Fed may do. Let's listen more to see even more information.
where do you go? Where do you put your money? And the reason why it depends on the Fed is because it depends on what the Fed does next. If they continue fighting inflation and they say, we're going to do whatever it takes to bring inflation down, that means we're going to pull money out of the economy, we're going to jack up interest rates, even if that means that we're going to go into a recession, even if that means we cause a housing market crash, even if that means we cause a stock market crash, we're going to keep doing it. If they do that, well, then you're going to have a big buying opportunity in pretty much any asset class, assuming you find a good investment there, a strong fundamental investment. But there's also the chance that the Fed doesn't do that. There's a chance that the Fed says, we're starting to raise interest rates now, and this is what they're doing right now. And then 6 months go by and they say, these higher interest rates are really hurting the economy now. The economy isn't as strong as we thought.
So
the economy
back down a little bit,
and then they start cutting interest rates. Now what are you doing? You're in a high inflationary environment.
Oh, man.
And now you're creating more inflation in order to fight the economy. Because the Fed can either fight inflation or they can fight the economy. They can only do one or the other. And in all the previous crashes that I talked about, we were never worried about inflation. We were worried about an economic slowdown in 2008. We were worried about an economic slowdown, 2001, economic slowdown. Even in 2020, the worry was not inflation. The worry was deflation.
Right.
The Fed says, we can't have deflation. We don't want people to have their savings worth more. We need to create more inflation. And now we have an inflation problem. And so if the economy goes down, what do? You create more inflation to save the economy. However, that creates more inflation. Our economic slowdown today is being caused by inflation. You cannot fix an inflationary recession through more inflation. What's that going to do? It's going to make the inflation problem worse. Yeah, it'll probably boost the economy in the short term, but it will crash the stock market and the real estate market, not downwards, but upwards.
Interesting.
And that's a very interesting concept to think about, because when you think about a market crash, what are you thinking? Stock prices go down, real estate prices go down. But if you're worried about high inflation and then you start creating more inflation, what's going to happen? People are going to take the dollars and they're going to want to get out of cash, because they're going to say, if our inflation rate goes even higher, our cash is going to lose value even quicker. We want to own any asset, stocks, want to own real estate, maybe cryptocurrencies, some smart ones. You're going to see more cryptocurrencies potentially go under. We've already seen some go under. So you're going to want to make fundamental investments, but you could see just a lot of money flow into these assets, kind of like what we saw happen in 2020. We were in a recession, but the stock market was going upwards.
Right.
Why? The money printer let it all in. So that's where you want to pay attention to what's happening there.
How high do you
Just what JASPREET singer said. You know, so the Fed has two choices. All we could do is wait to hear what he's going to say. It looks like the Fed will be continuing the interest rate rising, fighting inflation. But if he were to change his mind, that's what we need to worry about. Right now, cash is king. The more you have, the more amount of cash that you have to deploy it on assets that look like they're for sale, the better you'll be. In other news, we have give me 1 second. I'm still streaming. Another news we have. Let's see what's going down with Celsius. Celsius pays down $143 million, and Dow loans since July 1st. Crypto lender liquidation price on its Bitcoin loan has dropped to less than $5,000 according to DeFi industry data. Celsius has repaid a substantial amount of its outstanding debts to Maker protocol since the beginning of the month, signaling that the troubled crypto lending platform was trying to stave off a complete collapse and credible rumors of insolvency. Since July, Celsius has repaid $142 million worth of dialed stablecoins across 4 separate transactions, according to data from DeFi Explorer. The crypto lender still has $82 million in outstanding debts owed to Maker. Out of $1.8 billion in lifetime investments, the firm's losses currently stand at $667 million. With the loan repayment, Celsius liquidation price on its wrapped WBTC loan has dropped to 4,966 Bitcoin. The liquidation price reportedly fell by nearly half since Celsius posted a $64 million diode payment in July 4th, mere hours after it paid $50 million in diode. It's pretty interesting news right there. Seems like Celsius is trying to make good on its investors, people who put assets inside their platform. And their issue was market volatility, and they had liquidity issues. So it seems like Celsius is trying to pay down its debts so they could maybe free their assets. This, for me, doesn't it still has some risks. Celsius still has some risks in being able to pay off its or allowing the people that put tokens inside their platform out. We will just have to continue covering the Celsius news. We've, in this platform, the State of DeFi, we've shown you guys plenty of people who's been affected. Celsius had stop withdrawals, and they just weren't allowing people to send their tokens to a wallet and stuff like that. So yeah, we'll still have to look at what's going on with Celsius in the future. Hopefully they pay off their debts and allow their customers to get into their Celsius account to withdraw. Yeah. Let's check out some more news. Had some rumors about KuCoin. Let's check this out. Put this in a bigger screen. Okay. KuCoin CEO slams insolvency rumors, citing no plans to halt withdrawals. Rumors linked KuCoin intent to stop withdrawals with Terra and Three Arrow Capital collapse, which, according to the warning, led to immense suffer for the exchange. crypto exchange KuCoin found itself at the center of discussion when a sub-community of crypto Twitter started warning investors about an incoming ban on funds withdrawals. KuCoin CEO Johnny Liu was, however, quick to dismiss the unvetted rumors before they picked up steam. Prominent crypto figures on Twitter, including trader at Kong BTC and blockchain investor at Otaru, requested their followers to withdraw all their funds from KuCoin, while claiming that the exchange may soon stop all users from withdrawal. Well, it seems like everybody is basically on notice. Everybody's basically on notice. You have a lending platform like Celsius going belly up. You know, it's a cause of concern. Now everything is pretty risky. People are starting to realize that if an exchange or a lending platform becomes insolvent, most likely their assets inside that company will also be lost as well too. This should be known to everybody that if it's not your keys, it's not your crypto. This is a known fact. So the Twitter people, I don't know if it was baseless or something like that. Where did they get that information from? That's a question. But they should be telling their people they know that, hey, I'm not keeping my money in an exchange. I'm not keeping most of my assets in an exchange. And if you've been in crypto for a while, I mean, you kind of learned that lesson from Mt. Gox, all the way from Mt. Gox in 2017, all the exchanges, BitConnect, all the platforms that just basically disappeared. We're in a bear market, so I mean, this should be your concern. Do you have control of your assets? Do you know? So, I mean, what I think is the comments that they said before, if we check that out a little bit more. Let's check out the comments. Withdraw from KuCoin right now. Not a drill. No time for threads. Like and retweets to spread the message. Auto hardly wrong in such matters. Beware of FUDs. Not sure who's spreading these share. I guess KuCoin responded, share rumors and what their intentions are, but KuCoin does not have any exposure to Luna, 3AC, Babel, etc. No immense suffer from any coin collapse. No plan to halt withdrawals. Everything on KuCoin is operating well. Yeah, I think the thing is, when people have been hit, they start to respond a little bit differently to even any kind of platform. So, yeah. I don't know if we should really worry about that. We're at 20 minutes. So I'm probably going to close this up. This the state of DeFi. Happy 4th of July. Do your mid-year resolutions. And remember what I said. If it's not your keys, it's not your coins.